Trade what you see with Larry Pesavento. Call now, toll free at 1-877-927-6648 or internationally at 727-873-7618. Now, Larry Pesavento.
Okay, looking good, Billy Ray. Feeling good, Lewis. So we'll start out the show like we usually do, taking a look across the pond at the German DAX and the FTSE. As you can see, they've been in a little bit of a downtrend here these last few days, and of course, we had a little bit of a sell-off this morning after making new highs yesterday. The key point to watch here in the S&P is 3,300. If we get below that, that tells you there's trouble in River City. But until that happens, it looks like the trend is still up. But you can see that we're having some good volatility, and that's we're going to see that increase over and over again. Now, today, folks, we have a very special guest, somebody new, just about my age, a couple years younger than me, but like I've studied Henry at H.M. Gartley. This gentleman has worked with Richard D. Wyckoff, his work from the 1920s. He'll be talking to us at 9:30. He's got some cool-looking charts, and so we'll take a look at that. But I wanted to walk over a couple of things that I think is important about chart patterns and stuff. First of all, I wanted to show you one. This is from the New York Stock Exchange, going back to 1872 when I first started trading. This, folks, this is just 5 years after the Civil War. So you're talking about we're first starting to get data now during that time, and you can see here that during between 1920 and 1929, the prices of seats had a heck of a run. They went from 50 all the way up to 650, and then back to almost zero. Now these patterns repeat over and over again. Now, here's one in a short time frame. Just because Mr. Z was asking us about this, I wanted to bring it up to you and show it to you. This is the British pound, but this is just a 15-minute chart. You can see we went all the way up. We actually got a little above 131, and then we came all the way back down, folks, and we're down to 29.20. And Mr. Z, I think you're right. We are very, very close to what I think is some pretty good support in the British pound. But there's one caveat that you have to be aware of, and that is in this U.S. dollar index, because boys and girls, this thing has potential to really get moving. And here's what we're going to see this morning. All righty, here's the ABCD leg. You see that we are just ready to take out the highs from December. And boy, if we get above that, folks, we're going to really scream. So I'd be careful of the British pound and also the euro. The euro's breaking down badly. We're way below that 110 level. And so that tells us that it certainly doesn't look very bullish from that point of view. So that's one of the things that I would like to, to bring to your attention. Now, there is a stock that's in the news that I think it really is a testament to pattern recognition, and I wanted to spend a little bit of time this morning looking at that, and that is the Uber. If you'll remember when Uber came out here way back in May of last year, it got all the way up to 47. As you can see here, there on June the 30th, we were making a beautiful three-drive to a top pattern. You can see it just absolutely perfect. The 61% retracement, the two expansion numbers coming in with the beautiful ABCD up there at $47 a share. And from $47 a share, it drops in half. Almost in half, drops 48% down to $25.50 a share. And what do you have at the bottom? Again, you have a really nice ABCD pattern at the bottom with another three-drive to a bottom pattern. And if you look at the cycles, you'll see that they were lined up pretty nicely. But the second part of this is if you'll look at the time between November and January, there's the easy trade, folks. This is the Roy Longstreet, Bill Longstreet trade to the 135 pattern, the one being in November the 3 being in December, and the 5 being in January. It's a 61% retracement from the number 3, and folks, it's a 382 retracement off of the one on November the 20th, and boy, November 16th. That's why that one is so very bullish. And you'll notice the price up there today, 39.19. What is that? That's a 61% retracement of the move that we're seeing today. I think that's where it's trading, is around 39 and change, but we'll have to, keep an eye on that. So that's just one of the few things that I'm looking at. Now, I would like to talk just a tiny bit about the British pound one more time. I want to get this up here to show everybody where it is, because it is flat out right at major support down here. You'll get this up here to take a look at it, and I believe it's major support too. I really think it's got a chance here at this level. Just see, we're down 10 days, and we're right at that level. We're at key support. Very, very important at that level. And the reason why is insignificant, because it's a fib number. That's really the main thing. But I don't know the fundamentals, but it's got to hold 129. If you see it trading below 129, something's wrong in River City. You just don't want to mess with that. Mr. Z's pointing out that we're 29.29 is the last. Your risk there is, you're talking 30 points, $6 a point. You're risking, $250. You're in a contract that's worth about 60,000. And you're trading in it's a nice retracement. That's all it is. But we're at the flat out moment of truth in this dollar index, folks. And the euro's already broken down. Maybe it reverses from here, but the pound is a different currency. So look at it. The risk could, hey, folks. Let me explain something to you. These patterns that we have, they are not the Holy Grail. Duh. I think we already knew that. They do two things. One, they do have slight predictive behavior. They do give you an idea what's supposed to happen. But the main thing that they're there for is risk control. You know that if these patterns break below those levels, there's something wrong. And if we break below 129, there's something, say 128.80. That's a $200 risk. Anything below 128.80, I would say, whoa, there's something wrong. Ride another horse. Whoops, that was the wrong thing to say today. Anyway, let's keep an eye on that. That's going to be very, very interesting. Another one that we have to watch is the one that Ruby's been following, and it's starting to act really nicely, and that is the hogs. The hogs are starting to pick up really nice, and so we're going to see, how they end up. Now, I wanted to spend just a moment here to go over what Tom Hugard has been doing with his Tesla, and I just wanted to give this show you, because he's put a hold on. Okay, no, that's not my proclamation. That is I believe that's Jesse Livermore, but I can't remember. Speculations and activity of that, so who knows. Anyway, let's just move on and take a quick look here at Tesla. You'll see here when it made its high, you can see there's an ABCD pattern up there. Remember, this is a 15-minute chart, so it took just a few hours to complete up there at the 960 level. We've dropped $300 a share, folks, in Tesla in just a matter of 3 days. And what did we do last night? We rallied right up to the 382 retracement of the high that we made back on February 24th, and I'll continue later. Hope we'll be right back.
If you're not currently using the TAS Profile Scanner when looking at setting up your trading opportunities, then your arsenal is short a mighty weapon. The TAS Profile Scanner is a standalone piece of software that instantly filters over 2,500 global financial markets such as stocks, ETFs, commodity futures, and Forex. Headed by Steve Dahl, Taz understands that in today's technological world, the use of top-flight software applications and technical analysis expertise is essential to successful trading in today's market. You also gain access to the webinar that Steve Dahl and Tom O'Brien just hosted, The Best Way to Use the Taz Profile Scanner to Profit. This webinar archive is available for all subscribers immediately upon signing up. All new subscriptions also come with a 30-day money-back guarantee, so you have nothing to risk. Start your subscription by visiting the front page of TFNN.com today, and you'll find the Taz Profile Scanner under the Services tab. Sign up today. Are you in the market for buying or selling real estate in the Bay Area, including the surrounding St. Petersburg, Tampa, and Clearwater markets? Tiger Real Estate LLC is a firm that has extensive experience in the Tampa Bay area. Whether you're looking to sell your current property for maximum value, or you're in the market for a second home or investment property, Tiger Realty has the experience across all areas of real estate in the Tampa Bay area to help buyers and sellers make the most informed decisions across all price levels. From the price you should be paying per square foot in certain up-and-coming areas to the type of cash flow investment properties are capable of creating, Tiger Real Estate can help you make the best decision when it comes to all areas of the market. Before you make one of the biggest decisions of your financial future, call Tiger Real Estate LLC today at 727-329-8322 or email us at tiger@tfnn.com. That's 727-329-8322. Call us today.
Many of our new listeners have heard about The Tiger's Den. The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of the TFNN shows, plus see all of the charts as they happen live and have access to archives of all of those charts. You can test drive The Tiger's Den absolutely free for 30 days and greatly enrich your knowledge of these markets and how to make your money work for you. Details on The Tiger's Den are on the front page of TFNN.com.
TFNN has launched our brand new website. You can still visit us at the same TFNN.com URL, but when you do, you'll see a new and improved homepage with a much simpler navigation, whether you're watching Tiger TV live in high definition or just accessing your newsletter subscriptions. We even have new pricing in 6 months and yearly options. Check out the new TFNN.com now and experience all the upgrades. TFNN.com, educating investors.
Call now, toll free at 1-877-927-6648. Internationally at 727-873-7618.
Okay, folks, we're back, and I wanted to take a second here to go over the hog chart because Ruby has an interest in it, and she's a great supporter here of TFNN, and I think it's important that we really look at it because we've had some really good patterns in hogs, and it looks like they made a major bottom here, and I missed something really big, and I apologize for that, but there's just too many things that I've been following with the currencies and all the other things. But let's take a look here, and I'm not even I don't know his phone number out. Oh, I forgot. Let's move on here. Okay, here's the hog chart, folks. This is April hogs. You can see back in April, you can see that we made a butterfly top up there with the ABCD just right at the 91 level. But look at the ABCD, folks. From that level in April down into August, it rallies up to the 75% level, and then it comes down and makes a D level down here at 62. Now look, you see the gap downs here where we're at limit here in January, early February. But look what happened there. We stayed there for 3 days telling us there was a bottom in there. That's what Ruby was pointing out to us, and I think that's why it was interesting. And, we've rallied, 3.5 cents since that, 3 cents at that time. So that's telling you that it's made some type of a major bottom. So those are the things that you're looking at. Look at the ABCD patterns. If you want to, hogs are real easy to trade. They have margins almost nothing and great volatility. But look at the ABC between April and July. Perfect. Look at the ABCD between August and October. Perfect. maybe these things work. They don't work all the time, but when they do, that's when they're very, very important. Now let's take a look at one other of the futures that we follow quite a bit, and that is the old corn here, because it's not acting very good. Let's take a look here. This is the March corn, folks. We'll get this up here. You'll notice here the low that we made yesterday, down at the 376 level. That's just about the fifth time that we've hit that 78% level at 376. That tells us there should be some pretty good demand at that level, but they hasn't started to move up yet. But the risk here is going to be very, very small. You don't have to, buy a farm and lease the land and the tractors and hire laborers and stuff like that. You buy a contract at the Chicago Mercantile Exchange for 5,000 bushels, and then you can put your stop below 372. So for $350, you get to be a farmer for the next 6 weeks as we're trading March corn. So that's what I would be watching as I'm looking at these today. Okay, now the market sold off a little bit today. The 333 level is the real key level, 3,300 in the S&P. If we get below that, that'll be a sign that maybe there's, some type of a top end. But frankly, since we made new highs, you really have to respect it, folks. It shouldn't have done that, but it does. They do it all the time, and so you want to be able to see if that is going to be the case. One other thing that I wanted to bring to your attention today regarding my friend Tom Hugard is, if you'll look at this here, natural gas is trying to make a bottom, Tucker. I'm certainly watching that one. But here is the German DAX, and you'll notice it had been in this really tight trading range over the past few hours, and all Tom did was, when it broke below that trading range, he figured that was support. Look how many times it hit it: 1, 2, 3, 4 times. And once below it, it wouldn't rally back, and that had a huge move. And he puts on a very large position at that point, and when it goes, it really goes. So that's one of the way he trades. He trades these breakouts of these channels, and they're really good. They're not predictive, but what they do tell you is when you're right or wrong. Because if it breaks and then snaps back into the channel area, you're wrong. So you have to exit that position very, very quickly, and that's what risk control is all about: is determining when you're wrong. It's you want to be always focus on the defensive part of that, folks. That's the real key, to looking at it. That's what we try to do here at TFNN. That's a very, very important aspect of our trading. Let's move on to that dollar index. Oh, we have another question. Oh, what was it about? Oh, shut the front door and raise the rent. Oh, doggone it, I don't have it. Oh, here it is. Hold on one second. We have another question about the futures. That's about the sugar. We're starting to break down. Let's get this up here. We did hit the sugar here. We'll get this up here. That DAX right there where it is, David, 98.46. That's the ABCD. That's the old double top. So there's a possibility that that dollar index could be a double top. You can see it from the chart that I posted. It's just where it was 6 months ago. So that could, and the ABCD says it's going to go a whole lot higher, but maybe that's a double top. We don't know. But sugar did hit a little above $15, and now we're starting to sell off. Double ABCD patterns up in there. So I would be waiting to see a nice pullback in sugar to about the 1,300 level, down about $1,500 from where it is right now, and we'll be able to see that. Tom, what was about Bud Rolfs? Is he okay? I don't know. Oh, there's a great quote here from David White about Michael Gordon. And he says, I have missed more than 9,000 shots in my career, and I have lost almost 300 games. On 26 occasions, I've been entrusted to take the game-winning shot, and I missed. And I failed over and repeatedly in my life. And that is precisely why I succeed. You don't measure men by their success. You measure men by how they pick themselves up from failure, a la Michael Jordan, number 23 of the Chicago Bulls. Okay, let's move on here. We've got another thing to question here, and that is about the coffee, because coffee has dropped down. We've already talked about this. We've had a nice little bounce here, but we did get down. We talked about this the other day. We got down to that 96 level, so we still held the lows of October. Now we've bounced up quite a bit, so there could be a pretty good bottom in here on the coffee this week. So this will be an interesting one, to pay attention to as we look at some of these. Someone's asking the question, do I know whether the top in the market is in? Folks, I have no idea, and I don't really care. I trade short-term patterns. I use 4-hour charts, 30-minute, 15 minutes, and the reason why is it tells me what the amount of risk is, and that's the real key, to what I'm looking at here, and it makes it really interesting to see these things happen over and over again. So that's it. I hope that helps a little bit. At our break here, we're going to have James O'Brien. He happens to be the 32nd cousin of James O'Brien is the 32nd cousin of Tommy and Tommy O'Brien of Boston. I went into Google and I went to Ancestry and looked at their tree, and if you believe any of that, folks, I still have 2 shares of the Brooklyn Bridge, and we will cover that. But I talked to James O'Brien. He knows what he's doing. Wyckoff happened to be one of my favorite people to read about during the 20s, along with Schaubacher and Edwards. Well, Schaubacher is the father-in-law of Edwards and McGee, and then, of course, H.M. Gartley, Harold McKinley Gartley, and some of the others. So we'll see. But he's a real nice guy, and I know we'll have some. Maybe you have any questions, call in, and he'll probably let you see some of the work that he's doing. But Wyckoff knew what he was doing. The Wyckoff method is a great method. 877-927-6648. We'll be right back.
Larry Pesavento has just started his brand new service, Fibonacci 24/7, and he's already delivering content to his subscribers on a daily basis when the market's opened and even on weekends. Each Monday, you'll receive Larry's written report that provides detailed commentary and a summary on the charts and videos that Larry sends out. And throughout the week, when warranted, Larry will send out via charts or videos or both the key markets that he is watching during the day. This will be up-to-the-date, active trading information that will help you in your daily trading. In Larry's first week alone, he sent out 25 charts, 6 videos, and a full report to his subscribers in just 1 week. If you're a technical trader that uses patterns and retracements to trade, then Larry's service Fibonacci 24/7 is something that you must try. Right now, new subscribers can get a full 30-day money-back guarantee. With nothing to risk, sign up now to Larry Pesavento's Fibonacci 24/7 by visiting the front page of TFNN.com under Trading Newsletters. If you're a trader in the market looking to find the path that leads to maximizing profits while decreasing risk, then now is a great time to try out Dave White's daily trading service, The Path of Least Resistance. Through the use of options and equity trades, Dave advises his subscribers on a daily basis of the current market conditions and what possible trade setups are on the horizon. The Path of Least Resistance is published every trading morning, often with updates intraday when initiating trades or closing out positions. Dave White has advised his clients of some outstanding winning options and equity trades in recent months, and now is a great time to try it out for yourself. New subscribers to the Path of Least Resistance receive a 30-day money-back guarantee. See for yourself the types of options and equity trades that are available by signing up for the Path of Least Resistance today by visiting the front page of TFNN.com and selecting the newsletter tab. Sign up today. TFNN is excited about our new software charting program, The Art of Timing the Trade Charts. In collaboration with Tom O'Brien and using his best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System, David White has programmed an outstanding piece of software that will complement any trader's methodology. Using this first-of-its-kind program, the Art of Timing the Trade Charts allows you to scan thousands of stocks for Fibonacci formation setups, including Gartley's, ABC's, butterflies, and much more. The Art of Timing the Trade Charts is designed to help you when scouring the markets for stocks just beginning to form the trading patterns that many investors spend days, weeks, or even months searching to find. And right now, we're offering licenses available at only $79 a month. We are so confident that you're going to love this new charting software that will even give you a 30-day unconditional money-back guarantee. Don't miss out on this incredible new piece of software. Get your copy of The Art of Timing the Trade Charts today by visiting TFNN.com.
This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
Okay, folks, evidently we're not able to get Jim on the line today, but I posted a couple of charts in here that we were going to cover with him because I do like the Wyckoff method. And the second chart, folks, it looks like a la Basil Chapman. Basil, I don't know if, Jim's on the line now. Jim, are you there? Jim O'Brien, are you there?
I am there, Larry. How are you?
Hey, shut the front door and raise the rent. We've got game. James, we want to introduce you to the folks here at TFNN. We got a whole bunch of traders here in the Tiger Den and a lot of people listening across the globe here. So tell us, we're going to talk about Richard D. Wyckoff. So you want to tell us a little bit about it? We've got about 25 minutes. So why don't you tell us your little journey? You're a few years younger than me, but tell us why you selected Wyckoff. He happens to be one of my favorites, by the way. So you've got the mic. Go right ahead.
Well, when I came back from Vietnam after in 1969, I was looking to invest some of my money in the stock market, and I came across the Wyckoff strategies and techniques that were then marketed by Wyckoff Stock Market Institute out of Chicago, Illinois. And I bought their course and have been studying Wyckoff for over 50 years. Wow. I learned that Mr. Wyckoff was a great trader in the first part of the 20th century, and his whole secret was that he wanted to find out exactly what the big movers were doing, the Keens, the Harrimans, the Livermores. Today there's mutual funds, hedge funds, pension funds, etc. And what he did was, if I can learn and I can study their price spread and volume, how they're manipulating the stock, how they're handling the stock, then I can follow along and get in at the right time and make some money and get out at the right time. And that's exactly what Mr. Wyckoff did. He started his strategies, as I said, back in the first part of the 20th century, forecast a depression within 5 points of the New York Times index, which was the standard index at the time. And again, as I said, set up the school. What I've done, Larry, is I have. He also includes. He uses vertical line and point and figure charts. Point and figure charts aren't used that much these days, but they're a great sense of what. I want to say this. They're a great sense of where the stock is going to go. There is always, with every stock move, there is a cause, which is usually a lateral movement, and then there's an effect, either a movement up or down. The vertical line chart, it's amazing how it fits in. It will show you exactly what that effect is going to be by measuring the horizontal cause. It will give you the vertical effect.
Wow.
Go ahead, Larry.
No, I was thinking, I used to study point and figure. Roy Fassel, who ran the office there at Conti Commodities there in West LA when I first started trading, he was a really big Wyckoff guy. And he used to do his point and figure charts. And, I have literally forgotten the sequence. I'm going to post a chart here so the folks can take a look at it and explain to them what that point and figure chart is, because I've actually forgotten. So why don't we go over that just a second, if you don't mind? And because you're right, that no one uses it anymore. You just never see it.
Which one are you going to post, Larry?
Chart number 3, Jim. Chart number 3.
Is that the? Let me just quickly look at. Yeah, okay. That's Union Pacific, I believe.
Huh. Okay.
Okay, now chart number 3 has two things. It has the vertical line chart, and we just digress for just a second, which shows the horizontal movement. And if you look at that vertical line chart, you'll notice the tops and bottoms are lettered. So A over to M. That is the cause and the horizontal cause. If we go back up to the vertical line chart, we will see the effect. And son of a gun, okay, if Union Pacific didn't make a good portion of that effect. Now, the key to this is phases. These are not automatic and mechanical decisions that we make. When we look at the vertical line chart, we go back and we'll sit there and see how it goes up and down and up and down, and those are phases. And so we will look for the point and figure chart to reflect those particular phases. If we go back up to the chart again, you will see phase 1 is 15 points, phase 2 is 17 points, phase 3 is 12 points, et cetera, et cetera. And you'll notice that Union Pacific on this particular chart reached the objectives of all the way up to point T, which was in the area of about $125. So it just barely, it reached the phases 1 and 2 objectives, did not reach the phase 3 objective. The vertical line chart is done by establishing a point or a dot on these charts for each point that the stock moves, up or down. And as it moves up and down, these dots just begin to put together and form this horizontal cause. And that's how it works. Pretty simple.
Okay, now what is it? It's showing you basically supply and demand coming in. Is that pretty much what you're looking at as you're looking at these little X's and O's?
That's an excellent point. What we are doing is we look at these X's and O's, okay, and we'll take a look at the horizontal chart. You will see the vertical line chart. You will see, okay, we see supply runs out at point A in a climatic action. There's a rally to point B where it encounters supply again. So these tops and bottoms are supply and demand. The stock market runs on supply and demand. The more supply you have, okay, the farther down it's going to go. For example, yesterday, if you look at the S&P 500, it was trying to go into new high ground. It reached new high ground, but it did so on decreasing spread and decreasing volume. That suggests a lack of demand. That's exactly what you probably don't want to have during during going into new high ground. So we would expect the stock market to react today. Now, I don't know what's going on. It just opened, and I have no idea what the stock market is doing. But I'm going to guess that it's down a little bit lower today.
It's down a lot.
Pardon me?
It's down a lot.
Oh, it is? Okay, I don't know.
Yeah.
I didn't look. I'm getting ready for you.
Yeah, it's a couple hundred points lower in the Dow right now, I believe. So it's weak right now.
So we haven't got the chart here, but if you look at and this makes your point to supply and demand. I'll digress a little bit. The last reaction on the S&P 500 was on fairly wide spread and fairly wide volume.
Jim, we have to take a break here to pay some bills, so stay with us and hold that thought, and we'll be right back. We'd like to hear this. 877-927-6648.
If you're in the CD market and looking for a secure investment, the Tiger First Mortgage Program may work for you. The security for these first mortgages are building lots in a tax opportunity zone in St. Petersburg, Florida. The Tax Act of 2018 set up tax-free zones across the country where you can build and hold for 10 years and pay no tax on the profits, which makes these lots valuable. The investment is anywhere from $30,000 to $75,000. The interest paid is 7% yearly, paid on a monthly basis. According to Bankrate.com, the best rate for a 4-year CD in the country as of February 20th is 3.1%. A $50,000 investment at a normal 4-year CD rate of 3.1% would give you income of $1,550 per year or $6,200 over the 4-year period. That same $50,000 investment in the Tiger First Mortgage Program would give you $3,500 per year or $14,000 over the 4 years. Which would you prefer, $6,200 or $14,000 of interest on your investment? If you would like more information about the Tiger First Mortgage Program, you can call me at 877-518-9190. That's 877-518-9190. The gold market has taken off topside in a large way in 2020. If you want to take advantage of this sector, now is the time to subscribe to my gold report. The gold report took profits in 4 of its equities in the gold portfolio in the first week of January for a combined profit of 99.2%, with 2 positions left in the portfolio that have a profit of 67.5% as of January 7th. The Gold Report is a comprehensive look at the metals sector as well as the markets that move gold, which is the currency and bond markets. New subscribers get a 30-day money-back guarantee, so you have nothing to lose. Every Monday morning, I publish the Gold Report with coverage of gold, silver, bonds, the XAU, HUI, GDX, as well as more than 30 different mining equities. To see for yourself the types of profitable trades that are recommended within the Gold Report, sign up now by visiting TFNN.com. Don't miss out on the next great gold trade. Sign up today.
Will the S&P 500 continue to climb? For bold trades on U.S. large-cap stocks in either direction, trade SPXL, SPUU, or SPXS. Directions Daily S&P 500 Bull and Bear Leveraged ETFs. Direction Leveraged ETFs. An investor should carefully consider a fund's investment objective, risks, charges, and expenses before investing. A fund's prospectus and summary prospectus contain this and other information about Direction shares. To obtain a fund's prospectus and summary prospectus, call 866-476-7523 or visit directioninvestments.com. A fund's prospectus and summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors. Distributor Foreside Fund Services, LLC.
The Bull Bear Trading Hour with Tom and Tommy O'Brien. Next.
Okay, we're back, folks. We're talking with Jim O'Brien from Wyckoff Trading Techniques. James, go ahead. Tell us about this distribution that you were seeing in the S&P yesterday.
Well, what we're seeing is the S&P a couple of weeks ago rallied to a new high, and then it reacted. Supply came in very, very quickly, and it was on widespread and high volume, which is what shows you that there is going to be supply is present in this, and the stock or the index is going to move down. It reached a low. It then rallied poorly, and it rallied on decreasing price spread and decreasing volume. This suggests that there isn't enough demand at this particular point to put it into new high ground. Last Friday, it reacted sharply on high spread and high volume, and then this week it's rallied nicely. But the rally wasn't particularly terrific. It was done on decreasing spread and relatively decreased volume. Yesterday was a disaster. It was very narrow spread and very low volume. And although I guess I'm excited that it's down because I was right, it was pretty easy call. And it should go back down and probably test the lows around of last Friday's lows and begin. And either it's going to try to rally again and go into new high ground, or it'll move sideways for a while. But the S&P, I don't think tomorrow is ready to go into new high ground.
Okay.
And that's my prediction on the S&P 500.
Do you think there's a possibility this could be a major high that we've had here with all this emotionalism with the virus and the trade deficits or trade thing with China and the impeachment stuff? Is that a possibility, or do you ever make a prediction like that? Because Wyckoff made one. I remember that in 29. I just wondered if O'Brien's going to do it in 2020.
I don't think we're done.
Okay.
And Wyckoff had an old saying, and I think it's pretty smart, that the news doesn't take the market. It only gets it where it's already going to go faster.
Oh, I love that quote. That's right. Yeah.
And so there's not enough cause at this particular point, in my humble opinion, that the market we're not looking for a major reaction. I think we're entitled. We've been in this unbelievable market since 2008. We've all made a whole bunch of money, and life is good. And at some point, that's going to end. But I don't think we're quite ready. I'm a long-term investor now. I'm an old man, and I keep my money in a fairly aggressive portfolio, but it's long-term, and I'm not in and out every other day. And I'm very happy where I am.
Okay. Makes sense to me, my friend. Hey, listen, tell the folks how they can reach you, Jim.
Well, I'm kind of retired. You can reach us to the website at wyckoffstockmarketinstitute.com. I used to do some tutoring and whatnot. I don't do that anymore because I just don't. I just decided that I've done this for 50 years and I'm going to relax a little bit. I'm reading. I wrote the book about 3 or 4 years ago, and that's the first Wyckoff book that has come out since the original book that was written back in the 50s and 60s.
How much is the book, and where can they get it?
You can get it at wyckoffstockmarketinstitute.com. Spell the whole thing out, and I think you've got a slide there that shows that, Larry.
And just double check. I've got it here somewhere. That's for sure.
Wyckoff.
I've got that. Yep, that's the very first slide. Let's get it up here, and we'll bring it up here. You'll be able to see it. Oh, there's the whole thing, right? Just a second. I think it's been posted in the room, but we're going to do it again just to be safe. And folks will be able to see that it's the Wyckoff Institute, and then you'll be able to see it at www.wyckoffstockmarketinstitute.com.
Right.
What does a course cost, Jim?
Well, it's normally sells for $195. We are offering a sale with 30% off, so it's $136.50. And it's in addition to that, I have also done an audio version of the course. So if you buy the course, you get a written version in a PDF format, along with associated charts, so you can view while you're reading the course. Some of which we have right up here on the screen right now. And you also get an audio version. So if you want to sit in your car and listen to it and whatnot, you can do that too. And it's all part of the package.
Wow, that's good. We're having a question from one of our favorite people, Mr. Z, in the room, saying, "How did Jim and I meet?" John, we had the same parole officer. No, actually, yeah, I got him as a referral from somebody because I used to follow Wyckoff, and they said contact this guy. And then when I saw James O'Brien, I figured he had to be related to Tommy O'Brien and Tom, and so I got in touch with him and convinced him to come on, and had to write a big check to get him here. But by golly, we got him on. We're going to have him on again if you'd like to. So I want to thank you for coming on. This was interesting. I really loved Wyckoff stuff. And we've got a guy in the den here, Basil Chapman, who has charts that are very similar to the Wyckoff stuff. Basil's not here today, but I imagine it's very similar to, and he's from the Boston area. So up in that northeast area, so he's probably had some stand. He's in the same age group as we are. Well, he's a little younger than we are, but he's very, very good at what he does. But I like the way it does it. I don't particularly like the Elliott wave. There's just too many interpretations. The way Wyckoff did it was very, very simple to see distribution going through. But boy, I forgot all about point and figure. I haven't seen a point and figure chart. It must have been 5-6 years that I've seen one. But I want to thank you for being with us today. I hope it wasn't too much pressure for you. I had to convince you to be on the show, but you did a fabulous job. I really enjoyed it very much. And our folks here are telling you right now that they liked it too.
And a little more about Wyckoff because it's really, and I'll be glad to share some stories, some good stories and some not so good stories about
that's
money
good, yeah.
spent at the University of Wall Street.
Well, let's plan on having you in a couple weeks. How's that?
I'd love
We'll
that. Thanks so much for taking
we're going to do it. You bet. That James O'Brien, folks, the Wyckoff trading course. I highly recommend it. I've always liked the Wyckoff stuff. I've got a couple of books referring to him in my library somewhere. But it's very interesting to see how we got some of these things moving on. Wow, we're almost to the top of the big break here. Let's just double check to see what the markets are doing now. We went down to 33.24 in the S&P. 3,300 is the real one that we don't really do any damage until that point. We've had a little move in bonds now. They've moved, able to move a couple points higher this last couple days here. Let's see where we've gone from 60 up to 62. So they moved 2 handles up, but they've got to get above 6,400 before there's anything, anything really wrong with the market to see if it's going to do that or not. So, let's take a look at Mr. Z on the bond or the British pound. Hey, he was telling us at 129.29. We've now won up to 129.60. So my assumption is we've been down there twice. You don't want it to go there the third time. So I'd put the stop at break even and let her rip. I don't know about you, Mr. Z, but that's what my old radar is telling me. So we'll see. We're getting very, very close to the real key important price in the gold, folks. That's at 1581. We get above 1581, and it could be clear sailing. But 1581 is going to be a very, very tough one to pop through for on this this particular one. We'll watch it very, very closely. 877-927-6648.
I'm certain you are or strive to be one of the best at everything you do in life. It's the most common trait that we tigers and tigresses share. If you're looking to become the best of the best when it comes to managing your money, let me teach you to do what most wealth managers tell you can't be done, which is how to time the markets. I'm Steve Rhodes, author of Mastering Probability, and for the last 12 months, Timer Digest has been tracking my newsletter signals, which have earned me the ranking as their #1 market timer in the nation for the S&P 500 for the last 12, 6, and 3 months. Timer Digest also ranks me as the #1 market timer for gold as well. The fact is, markets can be timed, and I'll teach you the exact set of tools that I use that has transformed me into one of the best at what I do. Sign up for Mastering Probability today by clicking on the newsletter tab on the homepage of TFNN.com and get immediate access to workshops where I take you step by step how to use an extraordinary set of tools as well as provide great market calls too. Sign up today.
If you haven't checked out the newsletters page of TFNN.com, what are you waiting for? All of the TFNN newsletters are informative, up-to-date, affordable, and a must-have for every trader looking to gain a competitive informational edge in today's markets. TFNN newsletters cover every aspect of the markets to offer you the very latest in market news. Plus, new subscribers get to test drive our newsletters risk-free for 30 days. From all aspects of the markets, including stocks, bonds, metals, commodities, and tech, there's a newsletter to fit your needs exclusively from TFNN. Stay informed each day you trade and get that competitive edge that will help you stay ahead of the game. Visit our newsletters page by going to TFNN.com and click the newsletters button near the top of the page. TFNN.com, educating investors.
Basil Chapman will be hosting a 90-minute live webinar for subscribers to his daily trading service, The Opening Call, Thursday, February 13th from 4 till 5:30 p.m. Basil will host his live webinar titled The Dark Cloud Cover, an Essential Market Analysis. In this 90-minute webinar, Basil will discuss the techniques he uses when identifying market downturns using his Chapman wave, including how he uses specific ETFs like the SMH Semiconductor ETF as a canary in the coal mine leading indicator when looking for market downturns. By identifying particular weaknesses in the market technicals, Basil's able to identify the severity of the market reaction, and this is just one of many topics he'll be covering. To sign up now for the opening call, visit the front page of TFNN.com. Don't miss out on this special 90-minute live webinar with Basil Chapman, Thursday, February 13th. Sign up today.
This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
All right, folks, we're back, and we had a really interesting chat with James O'Brien, Wyckoff Institute. Boy, brought back a lot of memories. He certainly didn't sound like he was 76 years old, but sounded like a young whippersnapper. But that's good. That's what keeps you young in this business, is the study and meet the people that you met across the pond all these years. Uh-oh, we just lost Skype. 10-4. Uh-oh. I think I've lost control. Broadsword to Danny Boy. Oh, sorry. My Skype thing just said I'd just been disconnected, so evidently I haven't been. So that's good. Okay, we only got a couple more minutes here. We had one question, and that was about the Treasury bonds. We're trading at 162.16, folks. We've had a pretty big break here, but look where we are today. You're going to be able to see where we are. Let me bring this up to let you take a look at it. It's at a very, very important bottom. It was down here. We're almost. Let me draw it in so we can quick. You don't need to. I don't have to draw it in. You can see it. It's not a hard thing to see. Get this up here. We'll see the bonds where we are here. 162.24 is a 61% retracement on this. So sort of keep an eye on that. That's going to be an interesting one. The pound is still moving good, so keep your stop at break even there for Mr. Z, so you won't have to have any problems with any losses. That's the main thing. Watch the gold, folks, at 1580. It's a big, 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 big number up there. I should say it one more time. Big number up there in gold, 1581. We close above 1583.84, 1583 to 1584. I wouldn't want to be short gold over the weekend. That's how I look at it. But it's hanging in there pretty good, given the fact that we've had the jobs report, that those things don't really mean very much. The market reacts to them, but that's neither here nor there. But the main thing is, live every day in an attitude of gratitude, and may God bless. And please do something nice for someone who has a lot less than you. And folks, you don't have to look very far to find that out. So we'll see you all on the flip side on Monday. Have a wonderful weekend, and may God bless.